What is support and resistance? How do I identify strong support and resistance zones on a chart? Today, we will answer this and more. Hello everyone. StockShaala is pleased to welcome you to its third episode on technical analysis. Today, it's all about support and resistance. Technical analysis is based on the philosophy that price moves in repeated patterns. Support and resistance is one of the primary building blocks in identifying these patterns. Imagine bouncing a ball in your room. The room has two interesting levels, the floor and the ceiling. When you bounce a ball off the floor, the ball goes down on the floor and the floor pushes it back up. The floor here acts as a support and prevents the ball from going further down. When the ball bounces off the ceiling stops the ball from going further up and pushes it down. So the ceiling here acts as a resistance. These support and resistance levels are important because something interesting happens when the ball reaches the zone. Consider the following price pattern. X and Y are the major highs in this pattern, while A, B, and C are the major lows. Let's simply try and connect the major highs and lows. We see something very interesting now. The lows here tend to act as the temporary floor or the support zone, whereas the highs tend to act as a temporary ceiling or resistance zone. Every time the price level reaches the support zone, it is pushed back up. The direction of the price movement is reversed. Similarly, every time the price reaches the resistance zone, it is being pushed back down. This reversal of price movement is not guaranteed. However, we know something interesting happens when price reaches the zone. Low and high levels are very important for the market. Market is eagerly watching these zones. So when the price reaches support or resistance zone, price reversal or price breakout is common. What is the reason for price reversal at the zones? A support zone is a zone where the demand is higher than the supply. In other words, buyers are stronger, more enthusiastic than the sellers. When price reaches this zone, buyers are very enthusiastic to buy the instrument because they believe the instrument is underpriced. They're happy to bid higher prices and the price moves up, causing reversal. A resistance zone is a zone where the supply is higher than the demand, or sellers are stronger than buyers. So when price level reaches the zone, sellers are very anxious to sell the instrument because they believe this instrument is overpriced. Sellers panic and sell quickly, causing reversal. What happens when a zone is broken? Let's talk about support zone. So what happens when a support zone is broken? If a support zone is broken, that means sellers are able to defeat the supporting power of the buyers. Let's say there is a bad news associated with a company. Sellers panic, they sell quickly, causing breakout. When price breaks a support zone, the support zone now acts as the new resistance zone. Think of it this way. When you bring the ball down to the floor below, what was the floor now becomes the ceiling. Therefore, on the way down, when a support is broken, the support zone acts as the new resistance zone. What happens when a resistance zone is broken? It's just the other way around. So if a resistance zone is broken, that means buyers are able to defeat the resisting power of sellers. Let's say there's a good news associated with the company. Buyers get super enthusiastic and they buy heavily, even at higher prices, causing zone breakout. So when price breaks a resistance zone, the resistance zone now acts as the new support zone. So if you bring the ball back up to the floor above, what was ceiling now becomes a new floor. The analogy works here as well. So on the way up, when a resistance is broken, the resistance level becomes the new support zone. As a technical trader, it's extremely important to be able to differentiate between strong and weak support or resistance zones. The first point to keep in mind is support or resistance are not exact lines or price points. They are price zones. What does this mean? Let's say the last high acting as a resistance is $150. This does not mean the resistance is at $150. It means that the resistance is in the zone or area around $150. This is a very important point, so let's keep that in mind. The second criteria is volume. Volume signifies active participation in the market. If there is active participation from the market at a particular zone, that means a lot of people are looking at it and there is going to be great ride. So higher the volume, stronger is the zone. The third criteria, of course, is the extent and momentum of the actual move. If the distance between support and resistance zones are bigger, the zones are more significant. The faster the move from one zone to another, the stronger the zone. Think of it this way. If you bounce a ball off the floor with great velocity, the ball is going to bounce back quickly and higher. The more faster a stock price moves upwards, the more eagerly will traders be waiting to take profit and exit from the zone, causing reversal. Similarly, an abrupt move on the downside from a resistance zone will make the price appear as a bargain for buyers. So buyers get enthusiastic and start buying them, causing reversal at the support zone. The greater the momentum and extent of the move from one zone to another, the more significant is the support or resistance zone. Now that we've understood support and resistance zones, the characteristics of them, and how to identify strong ones, let's dive into a real-life chart example then, shall we? Today, I have with me a candlestick chart of Apple on the weekly. This is on investing.com. Let's first of all identify high and lows in this time frame and mark them. So this is a high I've identified and this is a low. I'm going to mark them. So I'm going to mark support as green and resistance as red. Okay. Is this really a support and resistance zone? Well, let's find out. So you see that every time the price hits the support zone, it's reversed and bounced back up. When the price hit the resistance zone the next time, it reversed and bounced back down. The next time the price reaches the support zone, it further reversed, and this time it broke the resistance zone and went above. We can also see two interesting characteristics over here. The first thing is that support or resistance zones, whenever price reaches them, it either reverses, as in this case, or price can break them. The second characteristic, when price breaks a resistance zone, this broken resistance zone now becomes the new support zone. So you could see that after price broke this resistance zone, when it fell down, it was supported by the support zone and pushed back up. The same thing would happen on the other way around as well. Is this a strong support or resistance zone? Well, it's very clear looking at the whole chart. But if you had to identify it without the information of what happened in the future, let's see, the first point. This is not a line, these are zones. I've drawn them as lines just to keep it simple on the chart, but keep that in mind. The second point is the range and the momentum. So there is a good range of move from support to resistance zone, $91 to $111. That's a good move. And the speed as well, the momentum is quite good. So here it's taken roughly about 10 candles to go up, and on the way back, roughly about 5 candles quickly came down. So that's good too. And you can also see the volume. So at these zones, there is good volume, and at the support zone, again, there's good volume. And here when it reached this resistance zone, there is good volume. So the market has been actively participating at these zones. All of this tells us that this is a strong support or resistance zone. Today, we've learned about two interesting zones on a chart. We've understood that when a price reaches support or resistance zone, usually either price reversal or zone breakout occurs. When a support zone is broken, the broken support zone acts as a new resistance zone and vice versa. We've also understood how to identify strong support and resistance zones on a chart. I'd highly encourage you to take some time and look up your favorite charts, identify support and resistance zones, and see what happens next. Thank you very much for listening. If you liked this episode, please click on the like and subscribe button. If you have any feedback or questions, put them down in the comment section below. See you in the next episode.